What if I told you most people lose money with XRP even when they think they're making money? Not because the price crashes, but because they're playing the wrong game from the start. They buy, they wait for a pump, they sell. And that cycle, buy, wait, sell, repeat, is exactly why 99% of retail investors never build serious wealth. Meanwhile, the wealthy don't sell their strongest assets, they use them. A lot of people believe that the only way to make money with XRP is simple: wait for the price to go up and then sell. That's how most retail traders think. But the truth is that mindset is a trap. It's the store and sell trap. The people who truly understand money don't rush to sell their best assets. Instead, they use them. And when it comes to XRP, one of the smartest strategies isn't selling at all. It's borrowing against it. That's where the real long-term exit plan comes in. Before we go any further, let me quickly share something that can completely change how you approach investing. If your goal is to find life-changing opportunities, the kind of stocks and crypto plays that can realistically go 10x, 50x, or even 100x, you need the right tools and positioning. That's exactly why I created the 100x Club. Inside, you get exclusive weekly stock alerts for potential 100x stocks, crypto insider alerts, millionaire mindset training to help you build generational wealth, and top 1% positioning strategies designed to help you multiply your wealth over time. Everything is explained in simple, easy to understand language. If you're serious about playing the game differently, it's all in the pinned comment below. Now, let's get back to XRP. Most people think the game is easy. You wait for the pump, you sell your XRP, and you lock in profits. That's how the average trader operates. But there's a catch. Actually, there are three big ones. First, when you sell, you trigger taxes. A chunk of your gains disappears immediately. Second, you lose the asset itself. Once it's sold, XRP is no longer working for you long term. And third, there's the emotional cost. We've all felt it. That regret when you sell only to watch the price go up another 2 or 3 times, that feeling hurts. It's one of the most common mistakes investors make. Because of this, the best investors don't sell unless they absolutely have to. They don't see XRP as just something to trade. They see it as a financial tool, something that can be used to create leverage, cash flow, and opportunity without giving up ownership. This is where borrowing against XRP comes into play. Think about XRP differently. Don't just see it as a number moving up and down on a chart. Treat it like an asset, something with real utility in your personal financial system. You don't have to sell it to access its value. You can borrow against it to fund opportunities, investments, or even cover lifestyle expenses while still keeping the asset. Here's a simple example. Let's say you own $10,000 worth of XRP. Instead of selling it when you need cash, you borrow against it. Many platforms allow you to borrow around 30% to 50% of its value. That means you could access $3,000 to $5,000 in cash while still owning 100% of your XRP. Here's the key part. Borrowing is not a taxable event. You're not selling the asset. You're simply leveraging it. Your XRP can continue to appreciate over time while you also have cash in hand. That's powerful. Some investors take that borrowed money and reinvest it into other digital assets, businesses, or income-producing projects. Others use it as a financial safety net. Quick liquidity without selling their long-term holdings. The strategy itself is what matters. You keep the asset, you keep the upside, and you still unlock value. This approach should sound familiar. It's the same strategy wealthy families have used for decades, with assets like real estate, 401ks, and whole life insurance. With whole life insurance, for example, people borrow against the policy's value instead of cashing it out. The asset stays intact and the money keeps working. XRP can function in a similar way. You borrow against your golden goose instead of killing it. That's how long-term wealth is built. Not by selling your best assets, but by holding them, compounding them, and using leverage responsibly. This strategy also gives you flexibility and power. You can borrow funds and deploy them into things that grow faster than the interest you're paying. Digital businesses, content platforms, e-commerce brands, or undervalued investments. That's how the wealthy play the game. They don't trade away their strongest assets, they use them. Let's be honest for a moment. How many times have you sold too early? I know I have. Years ago, I sold tech stocks thinking I was being smart by locking in profits. Those same stocks went on to climb much higher. That regret sticks with you. With XRP, the long-term potential could be massive. It's designed to play a role in transforming global finance. That's not a small narrative. If you believe in that future, then short-term trading misses the bigger picture. Wealth doesn't end at the pump. Small traders focus on price spikes. They sell, spend the profits, and start over. That loop keeps them stuck. Smart investors think in systems. They think about how to hold assets for years, how to extract value without losing ownership, and how to protect downside risk. Imagine XRP goes significantly higher over the next several years. Instead of selling and paying large taxes, you borrow 30% at a conservative loan-to-value ratio. You avoid exit risk. That borrowed capital can be used to acquire income-producing assets, build businesses, or invest in new opportunities, while your XRP remains untouched and continues to grow. That's the mindset shift. XRP isn't just something you trade, it's a foundation asset. Once you sell it, it's gone. But if you borrow against it wisely, you strengthen your base while gaining liquidity. Of course, this doesn't mean blindly trusting every platform that offers crypto-backed loans. Some carry real risks. Due diligence is critical. The space is evolving, and as regulation improves and fintech advances, these products will increasingly resemble traditional banking tools, only faster and more flexible. The concept itself isn't new. The wealthy already use it. Crypto simply modernizes it and expands the opportunity. So ask yourself this: are you focused only on short-term price action, or are you building a long-term strategy where assets work for you continuously? That difference is what separates average investors from those who build lasting wealth. Selling restarts the game. Borrowing keeps it going. And this leads directly into the next major principle: compounding. Compounding is what separates lucky trades from true wealth. When you sell, compounding stops. When you hold and leverage intelligently, compounding accelerates. That's how systems are built. That's how wealth lasts. That cuts your multiplying power in half right away. When you sell, the compounding stops. But when you hold and borrow, you keep the asset intact while still finding ways to make it more valuable. That's the difference. Let's make this practical. Imagine you have XRP sitting in your wallet and you don't touch it, you don't sell it. Instead, you borrow against it in a safe, controlled way. Now you have liquidity, real money you can use for other opportunities. That could be real estate, which can produce monthly rental income. It could be a stock or crypto that's temporarily undervalued. It could be a business or project with cash flow. The key point is this: you're not stuck. You're not trapped in a mindset of buy and wait forever. You're also not forced into sell and restart. To truly play the compounding game, your base asset needs to stay protected while you create new streams of growth around it. XRP becomes the foundation, not the finish line. There's another angle most people overlook, and it's a big one. Life happens. Markets don't move in straight lines, and neither do our lives. People lose jobs. Emergencies come up. Medical bills appear. Unexpected expenses hit hard. This is where most investors panic because all their wealth is locked up. When they need cash fast, they sell. The problem is timing. If the market is down when you're forced to sell, you lock in losses instead of gains. Years of patience can disappear in one bad moment. This is where borrowing against XRP can act as protection. Instead of selling the asset you've spent years building, you access short-term liquidity while keeping control. You can borrow to cover expenses, handle emergencies, or bridge a rough period. When things stabilize, you repay the loan. Your XRP is still there, ready to continue growing. That's how you protect wealth instead of consuming it. This is exactly why institutions and wealthy families love collateral-based strategies. They almost never sell their strongest assets. They leverage them. They understand that as long as the core stays intact, wealth continues to compound. XRP gives everyday investors the ability to think and act the same way. Now let's take this one level deeper. What if XRP isn't just something you own? What if it's the foundation of a legacy? Think about generational wealth for a moment. If you sell XRP for short-term gains, that money will likely be spent within one generation. That's what happens most of the time. But if you hold the asset and use borrowing strategically, the base remains intact. It can continue growing for decades. That's how wealth is passed down. Look at it like this: when you buy XRP, treat it differently from spending money. Don't touch it casually. Don't think of it as cash. Think of it as infrastructure for your financial future. You can borrow against it when needed, but you don't liquidate it unless there's no other option. This single shift in mindset moves you from thinking like a trader to thinking like an owner. That said, risk management is critical. This strategy is powerful, but only if it's used with discipline. The biggest risk with crypto-backed loans is borrowing too much. If the price of XRP drops sharply and your loan to value ratio is too high, you could face liquidation. That's the nightmare scenario, losing the very asset you were trying to protect. The solution is simple: build in a margin of safety. Just because a platform allows you to borrow up to 50% doesn't mean you should. Conservative investors stay around 20% to 30%. That buffer protects you even during market downturns. This is exactly how wealthy investors handle margin loans in traditional markets. They prioritize survival first, leverage second. The rule is simple: protect the base before you apply leverage. Discipline matters more than returns. If you overborrow and the market moves against you, you lose control. But if you stay conservative, time stays on your side. Now let's zoom out and talk about why XRP specifically works so well for this strategy. XRP isn't just another speculative coin. It was designed for utility. It's built to move value across borders quickly and efficiently, to help institutions settle transactions, and to improve how money flows globally. That's infrastructure level technology. Historically, infrastructure plays are the ones that create lasting wealth. Think about oil in the early 1900s. Think about the internet in the 1990s. Think about artificial intelligence today. These aren't trends, they're foundations. XRP fits into that same category within the financial system. That's why selling too early is such a trap. If you believe XRP plays a long-term role in global finance, then holding it makes sense. Borrowing against it simply allows you to unlock value without giving up future upside. Now combine that with leverage done responsibly. You're not just waiting for XRP to appreciate, you're actively using it to build additional assets while it grows in the background. That's dual compounding. Let's walk through a realistic scenario. Imagine you hold $50,000 worth of XRP. Over time, it appreciates and becomes worth $150,000. You don't sell. Instead, you borrow 30%, giving you $45,000 in cash. You use that $45,000 as a down payment on a rental property that generates $500 a month in income. Now think about what's happening. The property produces cash flow and may appreciate. Your XRP remains untouched and could continue increasing in value. You didn't trade one asset for another, you stacked them. That's how wealth multiplies. This is how the wealthy think. They don't see assets as things to sell. They see them as foundations to build entire ecosystems of value on top of. XRP can be treated the same way. Diversification also matters. You never want all your wealth tied to a single asset. Even if XRP is a strong base, borrowing against it allows you to diversify without selling. You keep exposure to XRP's long-term potential while spreading risk across other investments, real estate, businesses, stocks, or other digital assets. That's how you transition from short-term speculation to long-term wealth building. And it starts with one decision: don't sell too soon, protect the asset, use it when needed, let it grow quietly in the background while you create new opportunities around it. That's the real game. So the next time XRP starts moving up and the urge to sell kicks in, pause. Remember this: selling is what ends the compounding. Holding, leveraging responsibly, and thinking long-term is what builds wealth that lasts. Once you stop seeing XRP as just a trade and start seeing it as a financial foundation, your entire perspective changes. And that shift is what separates people who get lucky once from people who build wealth for a lifetime. You stop chasing the next big thing. You step off the emotional roller coaster of buy, sell, regret. Instead, you begin to see how the wealthy actually operate. Rich people don't sell their most valuable assets. They protect them, leverage them, and use them to generate more wealth. That shift isn't about charts or price candles. It's a mindset change. Most retail investors are driven by dopamine, quick wins, fast flips, hype-based decisions. But real wealth isn't built that way. Real wealth comes from patience, long-term planning, and discipline. When you start looking at XRP through this lens, it stops being a speculative trade and becomes a strategic asset in your portfolio. Let's walk through the core idea again, but from a bigger picture perspective. When you hold XRP, you can borrow against it. You then use that borrowed cash to invest in something that produces income or growth. That income pays down the loan and interest and may continue generating profit afterward. Meanwhile, your XRP remains untouched and continues to grow. What you've created is a loop. Assets creating more assets. That's the wealth wheel. Most people never get here. They stay stuck in trading mode. Buy, wait, sell, repeat. They wonder why they never break free. The reason is simple. They never let assets work for them. Because they don't understand leverage and compounding, they're forced to sell. Once you grasp this concept, you'll never look at XRP or any long-term asset the same way again. Now think about the future of financial products. Today, borrowing against crypto exists, but it's early. Platforms are imperfect. Risks are higher than traditional banking. But fast forward a few years, regulation matures. Banks and fintech companies fully integrate crypto. Borrowing against XRP could look very similar to borrowing against stocks or home equity. Cleaner products, safer terms, lower risk. Imagine that future. Your XRP is held in a regulated environment. You log in, request a collateralized loan, and within hours, the cash is in your bank account. No selling, no taxes, no destroying your long-term position. At that point, this won't feel revolutionary. It'll feel normal. And the people who understood this early will be far ahead. That's why it's so important not to view XRP as a get-rich-quick tool. It's infrastructure. Global finance is evolving, and XRP is part of that rebuild. When you hold it, leverage it wisely, and let it compound, you're not just participating, you're positioning yourself correctly. Wealth is about more than numbers on a screen. It's about freedom, choice, the ability to live life on your terms. When your assets are structured properly, you don't have to rely on selling your future to pay for today. Imagine building a strong XRP position. When you need cash, you don't sell it. You borrow against it. You use that money to start a business, buy a property, invest in an opportunity, or simply enjoy life without sacrificing your long-term wealth. That's lifestyle by design, not by survival. This is the real difference between people who struggle financially and those who thrive. Strugglers constantly sell the assets that could free them. Successful people use smart debt to protect their wealth and make it grow. But discipline matters. Borrowed money isn't free money, it's a tool. Used wisely, it builds empires. Used recklessly, it destroys them. XRP isn't just a speculative bet. With the right mindset, it becomes part of a wealth building machine. And this isn't only about you, it's about legacy. If you hold and leverage XRP instead of selling it at every pump, it can become part of something that lasts for generations. You're not just leaving money behind, you're leaving ownership in a system that may play a role in global finance. That's powerful. But there's a condition. You must ignore the noise. Pumps are temporary. Wealth is permanent. If you can stay patient, use leverage conservatively, and stack other assets around your core holdings, you can build something that outlives you. This is not financial advice, and this strategy isn't limited to XRP. The same principle applies to other strong assets: Bitcoin, Ethereum, high-quality stocks. Never sell the golden goose. Use it as collateral. Keep it intact. Let it compound. Borrow against it to build more. Compare that to the average trader. Constant stress, constant chart watching, emotional decisions, regret. Now compare that to this approach: calm, patient, strategic. While others chase hype, your assets quietly work for you. Over time, the difference becomes massive. That's why the future belongs to people who understand leverage and asset protection. As crypto integrates further into the global financial system, those who know how to borrow without selling will have a massive advantage. They'll have liquidity, growth, and legacy without ever giving up the assets that made them wealthy. Here's the core takeaway. Selling XRP might give you quick money, but it ends the game. Borrowing against it keeps you in the game. It lets you unlock value without giving up ownership. It allows wealth to compound over decades. It gives you freedom, choice, and control over your future. That's how the wealthy think. That's the path forward. If you want to take this way of thinking even further and actually apply it, that's exactly why I created the 100x Club. Inside, you get exclusive weekly stock alerts for potential 100x stocks, crypto insider alerts, and clear positioning strategies used by the top 1% to grow wealth over time. It also focuses heavily on the millionaire mindset, how to think long-term, protect your assets, and build generational wealth instead of chasing short-term hype. Everything is explained in simple, easy-to-follow terms so you can actually use it.